Hey everyone, check out this townhouse. Perfect investment. Come on in. I have something to show you. Here's a perfect 3-bedroom, 2.5-bath townhouse that's priced in the low 300s with rents in the $3,000 bracket. So here you have massive cash flow opportunity with a property that has basically zero maintenance. As you know, as the rental funding pro, my specialty is providing the right funding, but remember we talked about, I want to give you the right property as well. So here's a property that you're going to have about 1,000 to 1,500 positive cash flow in a great school district, in a new community, and you have high-paying jobs within 15 to 20 miles around here. So you're going to have the appreciation not only in the equity, but you're going to always have tenants in here that are going to be working at a high-paying job and a school district that most parents are not going to move. So this is the exterior of the neighborhood. I mean, what an awesome place to be able to have an investment property in a neighborhood like this, that you'll always have high-paying tenants in a great area with low maintenance. Okay, so now that we've looked at a type of property that would be ideal for investing in terms of rentals, we have to look at the next big criteria, which is location. And you should focus on location for investment property where there's job growth in this industry right here. This stands for science, technology, engineering, and math. And you want to be in an area where there's job growth, not decline. Okay, you want to be in a place where they're growing in this type of work. We know that Silicon Valley has, been the main hub for this type of job and employment, but we all know that a lot of people ever since the lockdown, they're starting to move out of those areas and coming into places like Orlando. Orlando is among one of the top cities for STEM job growth. That's where you want to be as a landlord, because that's where you're going to have the most appreciation in rents and also property. So here it says, move over San Francisco. Orlando possesses more potential for science, technology, engineering, and math job growth than California tech hubs. So when you look at the growth potential based on what I call, the main technology center, which is California, this area of Florida, Orlando, Orange County, there is an Orange County in Florida, believe it or not, tends to have a bigger upswing. So this is something that you want to definitely look at in terms of what areas and locations do I want to invest, because once you get property that's going to be below market, then say 5 years from now, that's where you're going to be able to grow, because this type of employment will always be in demand, and this type of employment will always have a need for housing, because if they come into the housing market at say a young age, then they're going to stay in this market as they have families and they grow. So when you come and look at the national data, here is a latest Bureau of Labor Statistics here in March of 2021. The data also shows here that Orange County, which is where Orlando is, has the highest percentage of weekly wage amongst the largest counties in Florida. So here you have Orange County, Palm Beach, Lee. These are the three counties that I would look, right off the bat as to where I want to invest in location, because that's the areas that's going to have the highest and stable income and wage growth. So then we look at the property, right? So we just looked at the location. Well, here is a property here in Orange County, in the area of Orlando. So these properties start in the low 300s, low 400,000 range. And this is the type of property we're looking at. I mean, look at the opportunity you have to, get one of these properties, not only one, but a few, for cash flow in an area that's growing in terms of job market and employment. And when you lock these down at these prices right now, people talk about there's no inventory. There is inventory. You just have to look in the right areas in the right location. And these are the properties that you'll come across. And, you know, when you look at fixtures like this is perfect for a tenant and also as a landlord, because here's low maintenance, open, you know, you have open space. And then when you look at the actual maintenance, you know, these are ceramic tile, so they'll last a long time and you don't have a lot of maintenance involved. Okay, so now that we've identified the location, you also now have to identify the actual type of property that it's going to be desirable for tenants to move into. I mean, imagine a property like this that you're going to be able to put on the market as rents, and these are going to go at premium, and these are going to also have very low maintenance. Okay, so now that we've identified the ideal property and we've identified the location that's going to be beneficial, let's crunch some numbers, because at the end of the day, it's all about numbers and it's all about cash flow and return on investment. So here's a little example I want to show you on what the numbers would look like. So let's say you purchase a price for $350,000 and you put 20% down, and I'm going to use a higher interest rate just to be on the safe side. Closing costs roughly $3,000. And then here we have operating expense annually, property tax roughly $3,500, insurance roughly $1,500, HOA about $2,000, maintenance and other costs. And then you have your rents for a single family residence in that neighborhood about $3,500. And then you have a vacancy rate about 5%, management fee about 3%. So these are ballpark figures. Then you have a value appreciation, roughly 3% a year. Right now, the market's going, this is low. It's probably going to be a little higher. And then this example we're going to use on a 10-year hold. So assuming that you purchase this as a rental for 10 years, and if you were to sell it down the road, it would cost you roughly 8% in commissions and whatnot to sell. So let's calculate and look at these numbers and see what we're looking at. So you can see here, let's look at the cash flow analysis first. Here we have a monthly income on rents, and annually you'd be grossing about $42,000 in rents that come in for that particular property. Then you have your mortgage, vacancy, and all the other fees. At the end of the day, you're going to have a net operating income of about $30,000 a year on that particular property on this example. Okay, so just by the analysis on the income and expenses, you're going to be in a positive cash flow, and that's where you want to be. And now let's look at the actual appreciation of the property over 10 years. So here we're looking at the total profit based on the annual increase of 3% in 10 years. You're looking at about a $321,000 profit in terms of equity. That's a 440% cash on cash return. Okay, so the cash on cash was the down payment you initially put when you bought the house 10 years ago. You got a cap rate of 8.72%, which is very good. You have total rental income of $440,000, mortgage payments, expenses. So your net operating income profit was, you know, a really nice size return on top of the appreciation of the property. Okay, and we were able to get to these numbers because we identified the type of property that you want to get into with low maintenance and in a great location based on the job growth and the school districts. Okay, and then here is a breakdown over time, kind of gives you a ballpark of year one cash flow, and then at the end of year 10, okay, this is a 440% cash on cash return. Now, I'm not a financial planner. I'm not giving you financial advice, but you tell me anywhere where you would have these kind of numbers on, you know, an investment that you could even utilize yourself down the road if you decide to move into it. So now let's do an analysis and say, okay, let's say we held the property for 20 years. Okay, you decide to just, you know, receive the positive cash, and based on that figure, we're looking at a much bigger return. Okay, so if you held that same property and everything stayed status quo with 3% annual income that you increase along with the value of the property, now we're looking at a huge return. Okay, so if you were to sell it 20 years later, you're looking at roughly $860,000 profit plus a cash flow of, you know, close to $1 million in net operating income. And then here you would have a breakdown, year one, all the way down to year 20. Okay, so this obviously is something that whether you currently own a rental or you're looking to get into the rental market right now, these are numbers that you need to break down and see if it makes sense. And based on the analysis that I showed you earlier, the type of property and the location, it definitely makes sense. Okay, so as you can see, this is the type of property that I would recommend for a first-time investor, especially because it's low maintenance and it's a growing area. And for those of you seasoned investors, this would be great to have into your portfolio as well. And in terms of the financing side, okay, there's opportunities that you can purchase an investment property like this. If you don't have any kind of income, you can verify whether you're self-employed. Okay, so make sure you click the link below, reach out to me. I'll give you more details on this particular house if you're interested, and also to get your pre-approved and let you know how much cash flow you would get by getting a property like this. All right, we'll talk to you guys soon.